He said that the silver juniors are undervalued relative to silver. Now, we know that that has persisted, but since his call, the market has come off the lows substantially.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and today we'll be discussing on the market rundown silver, copper, uranium, and palladium. There's the front page. Let's look at the markets first. The dollar is 103.14, down 7. 10-year yields are 407.7, down 3.5. The S&P 500 is 58.60, down 7. The VIX is 19.76. Gold is 26.50, up 2 in the middle of its range. Silver is 31.15, down 2. Copper is 432, still getting hit, down almost 6 cents. WTI is down a buck and change, was down more. Natural gas is 237, up less than a penny. Bitcoin 65,400, down 600. Ethereum is 2592, down 36. Platinum, palladium are both down about 11, 12 bucks. 1016 and 983. Palladium and platinum in that order. I always say platinum first, but I guess I got to say palladium first these days. And grains are pretty much down uniformly. Soy 998, down 6, 398, down 1 for corn, and 595 and change, down 2.5 for wheat. Okay, you could see the palladium chart there. We're going to get to that in a second. I want to go in order. So silver, copper, uranium, palladium. I think that's going to be in order. There's the front page, the fish hook. Gold might be clear for a takeoff. We explained why yesterday. The blockade on Taiwan, it ended after 12 hours, but it was definitely an escalation in activity and pretty much an overt threat. Your head resting on a spear come dawn. I mean, a little dramatic, but hey, they actually did what they said they would do in terms of blockading. All right. Discussion, silver, copper, uranium, palladium. We're going to go through some charts here. Larry McDonald has a report called the Bear Traps Report or Turning Point. He's very well known, gets a lot of time on CNBC. And we're going to go through just one or two things out of his, massive weekly report, maybe monthly for all I know. But it's very big, and he touches on every commodity in there, and he puts a couple charts in there for everything. This week, I wanted to focus on what he touched on silver. We'll include a link to his newsletter as well. All right, so let's go with the first chart. These are recreations of his chart, basically. All right, this is the XME versus the XLK. All right, so it's the tech versus metals. As it goes up, tech is getting stronger. As it goes down, tech is getting weaker. It continues. Now I'm quoting him. The XME metals ETF continues to kick the XLK's technology ass. This will only accelerate as inflation normalizes 3 to 4% world versus 1 and 2% in the previous regime. This is an interesting point. If you believe inflation is going to normalize higher, as I do, then you would think that this spread would go lower as the metals outperform. In doing that, I did a little bit of looking myself. It's important to look at what happens to a market when the Fed cuts and when the Fed hikes. So this peak, lower peak, lower peak, this could be nothing, but I'm going to tell you why I think it's something. This is when the Fed cut, right? Metals did better against tech. And this is when the Fed hiked from here to here. Rates made stocks do better than metals. And here we are at the beginning of a cutting cycle. So it's cutting down big, hiking up somewhat, cutting down big. So I think if you look at the relative performance, he's got a really good point there. Next. This is a pretty provocative statement. We hope he's right. Over the next 3 months or so, we see a retest of the 2011, 2012 highs in silver. Now, The smart footnote is to say this. It is worth pointing out that when silver really rises, uh, like when we saw the super spike in 2011 to 49.80 versus 31.53 today, it tends to spike and give up a lot of its gains as quickly as it surged. So as a result, agility in trading, if you're trading it, is highly important. Now, this line here is his. This is the I believe if it gets above 37.50, he believes there's no stopping it going there. I'm looking at the market a little bit closer, and I'm saying I wanted to get above 31.50, and then I'll be happy because then it'll be back in what I consider the new higher range. If it gets above 32.50, then I don't really think there's going to be a problem getting to $35. So I need the market to settle on a monthly basis above 31.50 or on a weekly basis above 32.50 to get excited. But hey, you know, 3 months or so, uh, he actually said 2 to 3 months. I'm just giving him a little bit of a buffer. So it's a pretty aggressive call, and my hat's off to him. Of course, I hope he's right. Next one. In 2023, late 2023, maybe November, I think maybe it was right around here. This is the Silver Juniors. He said the market was trading, yeah, it was trading right in here. He said that the silver juniors are undervalued relative to silver. Now, we know that that has persisted, but since his call, the market has come off the lows substantially. Not without, a lot of time. You may feel frustrated relative to silver, but his relative value basis puts it this way. That gives you something to think about. The junior miners are trading extremely cheap to SLV silver. In this part of the cycle, we look for the juniors to outperform the last two Fed pivots when the Fed cut. He's very, very Fed cut oriented right now. And he's got a very good point. SILJ shares highs were 21, 19, and 18. And I've marked those three off for you there. So that'll give you an idea. There's plenty of room on the upside here. And given the lack of silver that's available out there and the fact that no one has the money to spend on ongoing capital expenditures to find more silver, I think even though these guys aren't that junior, it's junior enough. They should do well. Okay, this is partly him talking and partly me talking. Palladium. Palladium is, I call it a broken market, meaning uh, it's small. It's run by a cartel, and I'm not talking just about banks. I'm talking about banks that have to deal with Putin, banks that have to deal with South Africa. They get cartelled themselves. Well, because it's a broken market, it's really not something you can trade with any sort of flow, the way I trade, because all the flows in one guy's hands, and it's like an evil scientist. But that makes palladium much better for longer term. So as small as a market of palladium is, it moves like an aircraft carrier. When it gets above a certain level, it stays above a certain level. And conversely, when it gets below. Now, his point is that palladium spent a lot of time under the 200-day moving average, which I have shown there. And now he's saying it's above it and it's back tested it. So I think speculatively speaking, that's not a bad idea. I bet you Elliott Wavers will have something to say about this. Let me zoom out a little bit to give you an idea. There's the 200-day moving average in palladium. Now, yeah, okay, you got chopped up in here, but this is for years. Going all the way back, it did the same thing. It does this. That's not an accident. See how it just bounces off of that? That's not an accident. Mechanical bank traders will trade 200-day moving averages. Those of us who are long silver since, 200 AD know that the 200-day moving average is an important moving average for silver. And whenever there had been a tamping, it was tamped at the 200-day moving average. Moving on, copper. ANZ has a report out discussing China's commodity statistics. China released its preliminary trade data for metals yesterday, which shows total imports for unwrought copper rose 14% month over month to 478.6 kilograms per ton. I'm out of my element here. In September, on improving seasonal demand and a better consumption outlook for the industrial metal. Cumulatively, imports rose 2.6% year over year to 4.1 metric tons over the first 9 months of the year. Meanwhile, imports of copper concentrate rose 8.7 year over year to 2.4 million metric tons last month as strong domestic refined output continued to support import demand for raw material. If they're buying copper, they're buying silver. It's that simple. Silver's not in this list. Gold's not in this list. That's not an accident. Okay, so there's the chart. Let me pop that up there for you. It doesn't get any bigger, but it's a nice little chart. ANZ is pretty good when it comes to base metals for sure. Cameco. Everyone's talking about uranium, Google, nuclear reactors. They're right. Last week, Goldman attended the Cameco Cigar Lake and McLean Lake site visit and a management dinner in Saskatchewan, Canada. Following the trip, they reiterated their constructive view on Cameco, where they continue to highlight the company's premium assets across the fuel cycle with exposure to attractive fundamentals in the medium and longer term. Competitive positioning on the global cost curve with lower relative geopolitical risk versus peers, particularly in mining, and there's more to it than that, a lot more to it than that. We are buy rated on CCJ, and our 12-month PE-based price targets are unchanged at 55 US or 74 Canadian. That's it. We didn't talk about gold. We're not talking about gold today. All right, so today's data, Empire State Manufacturing Survey, and we have the Cameco and ANZ reports giving more details on these two here at the bottom. Let's take a look at the markets before we get going. Yeah, that's my marking. I believe as long as the market stays above here, the market will go to 27.23 sometime between now and, say, December 31st. But I'm betting on a move for the BRICS. We'll talk about the BRICS summit, which is coming up soon. We'll talk about that next time. I'm Vince. You can see where the markets are now. Gold is holding. I won't expect too much out of today, but you never know. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.